Hey guys, it is Friday, January 31st in the evening. Bitcoin's a little over 102. Let's see, 102.3. And this episode, I think it's going to be a really good episode. I just want to go over a thought that I just posted on Twitter. And really, I'm going to call this episode Why the Non-Bitcoin Portfolio Does Not Work. And before I do this, again, if you are following me on YouTube, hit the subscribe button. That makes me happy. And if you're following me on Twitter, go ahead and subscribe as well. I put a little bit of extra content on Twitter. Okay, so what do I mean by this? I think, Saylor had this saying that, we have a word for the people who put their money in cash. We call them poor. But, it is the case that most people that I know who have wealth of any kind don't really store their wealth in cash. Very few people store their wealth in cash once they've made any kind of money at all. They buy real estate, they buy stocks, eventually they make private investments. So inflation does not rob you in a very simple way. It doesn't rob you just because you have this pile of cash and your cash is going down. That is not what happens. That is not the risk of inflation. That's not accurate. It's not like you make all this money and it just becomes less. It's much different. So what happens is inflation is raising the cost of all things, but it's also raising the cost of all assets. And the harder the assets, the higher the price goes up. Now, if you're looking at something like real estate or stocks, you can get over time something like 6-7% per year. There's going to be up years and down years, but overall you can get 6-7% per year. Unfortunately, the real cost of inflation is somewhere like that, 6-7% per year. Again, right now it's lower, it's like 3%, but it was quite a bit higher in 2020. And I think, the trend line is that, if you look at bigger periods, like over the last 20 years, et cetera, and you really look at the inflation that kind of matters to most people, not government calculated inflation, you'll find that, 7% is probably an accurate number for what, for what middle class inflation is like. So the problem you have is that if you put your money in an asset like stocks or real estate and you turn over that, well, you're going to be hit with capital gains, right? That's your best case. And, capital gains, you got 20% federal tax on capital gains. You live in California, you got another 10 to 13%, depending on the year, but say another 13%. So you basically have a third of that that's going to pay taxes. Now, what if you're putting your money in ordinary income, you're trading very frequently like Josh Mandel? Well, you're going to take half of your gains are going to be taxed. It's just going to go direct to the government. So basically, even in a situation where you're basically catching up with this inflation through investing, well, you're not really catching up with it because all the gains periodically are taxed. Many of the times you're going to flip something, you're going to move houses. You're not going to qualify for the you're not going to qualify for the capital gains. It's going to go ordinary income. And you're going to get screwed, right? And so that's fundamentally the problem with this fiat system. Fundamentally, the problem is you really can only sort of fight it by buying these hard assets. But even if you do, unless these assets are incredibly spectacular, like you find the next Facebook or something like that, you're not going to make it, right? Your assets are going to get taxed away. So I think that's the crux of what that we as Bitcoiners we realize. We realize that this is not a good situation, and Bitcoin is exceptional. It has much higher compounded annual growth rates than stocks or real estate. So stocks or real estate, you're looking at that sort of 7% range. Bitcoin right now, today, you're getting 40% compounded annual growth rate. So, that's not going to help you out if you're just starting in life and you have a couple $1,000. It's not really going to make a difference. But if you've accumulated 100 grand or more, and you're starting to now compound out that interest, I think that's really when, Bitcoin is exceptionally great. And so, I think that's a mind shift, because we don't need any law to tell us that Bitcoin's adopted or it's legal tender or anything like that. We can go out right now, all of us, and we can buy Bitcoin, right? So I think it's just a mind shift that that's the way you should invest, and not to follow the 60-40 portfolio, which in this kind of market is going to, you're not going to keep up. You're not going to keep up. You're not going to keep up with the cost of inflation. You will not, if you're a young millennial, you will never be able to buy that house. You won't ever be able to upgrade your house from the crappy starter home that you first bought to something a little better for you and your family. You really got to take a bet on Bitcoin. I think it's the only way out of this situation. So that's my view. I hope you enjoyed it. I hope this makes sense to you. If you have any questions or comments, please let me know and I will in Twitter or here. I don't follow the YouTube comments too much because there's a lot of spam, but let me know on Twitter. And that's it. Again, follow me on YouTube. Thank you very much.